Hello and welcome to my presentation on whether we should abolish cash or still live with cash within a society. So cash usage. So cash has three main uses. One being store value. So let's say the £5 note is still at face value still going to be worth that £5 in the future. Obviously, that changes with the purchasing power of that due to inflation in the future. So that £5 may not be able to buy as many things and many goods and services as it would do today or in the future. The second main use of cash is obviously transactions. So everyone uses that, especially in a market economy. Use it to purchase goods and services. And then the third is a unit of account. This really allows there to be, I guess, a standardization of how much everything of how we pay. You can count it. It allows us to understand whether a business had profit, making a loss, for example. So if we look at some statistics of cash usage, and specifically looking at the UK, it's estimated that 9.3 billion cash payments made in 2019, of which 2.1 million people who mainly use cash for their day-to-day purchases. However, cash usage has been on the decline over the recent decade with the introduction of online banking, contactless payments, and in general just the rise of the online markets such as Amazon, eBay, and we're seeing a slow death of this high street potentially. So in 2019, only 23% of all legal transactions were done using cash. This is down about 60% from a decade earlier. And then going back to that store value point, we can see from roughly 2008, well, probably before that, about 2006, we can see that the number of cash payments as a share of total payments has been on the decline for reasons I've just explained, because obviously the rise of the digital economy. However, banknotes as a share of nominal GDP have become, obviously the store value has increased. And the reason for this is obviously round about this time we were slowly heading towards the financial crisis, and the Bank of England had to decrease the interest rate to lows of 0.1%. Hence why we're seeing this rise in the value of banknotes during this time up until 2019. And also, if we look at 2020 in general, which could also maybe see a trend of cash becoming redundant. If we ignore obviously March time, because obviously that's where shops were closed, what you can see is that roughly by April, and then I think June, July, when shops were opening up again, you can see that there's been a dramatic decline in the weekly withdrawals compared to previous years. And even then, we had with shops open, pubs, restaurants open, still cash withdrawals were extremely low. And the main reason for this is because many shops are pushing customers to use cashless because it's more hygienic. And also the Bank of England to help this from increasing the contactless payment limit from £30 to £45 during the coronavirus, and then now it's at £100, making it so much easier for us to use cashless payments. And it'd be interesting whether this continues, obviously because it's more hygienic than cash, because it's not changing hands, and also it's much easier for shoppers to use because it's just a tap, you don't have to count it, and so on. So cash as a public good. So cash can be seen as a public good, not in the sense of when the holder of that £5 note, because obviously that is rivalrous and excluded because another person can't use that specific £5 note. But I'm talking about it in the system of a legal tender. It's non-rivalrous in the sense that if I'm using cash to make a payment for a good or service, then I'm not someone else and another individual cannot use cash to purchase goods and services. And it's non-excludable in the sense that its means of payments or a transfer of value works without compensation. There's no cost to using it. Whereas if you like paying using a credit card online, then the card networks, banks, and payment providers are all charging a fee. So if they want to make the digital money as a public good too, then they've got to ensure that no one can be excluded from it. So it's non-virus, well, yeah, excluded from it. And with what Sweden have been doing, have been the leaders in being a cashless society. They've actually seen this as being the case, especially in rural areas where the broadband networks may not be as strong, and this limits their ability to look online at their online banking, use contactless payments. So in these areas, cash is king, and government. I mean, again, this argument can easily be solved by investment in infrastructure in those rural areas. So again, it should not be a to say that we should be living in a cashless a society with cash and not go cashless, because it can be fixed in the near future. Also with the elderly, um, sadly, with that generation will pass, being the non-tech savvy elderly, but we'll have a next generation of tech savvy elderly who will be able to use this and live in a cashless society with ease. So again, that argument shouldn't be used as a negative to say, oh, we can't go cashless. However, it should be considered if you want to do it now, because you've got to make sure that they're not excluded from society. Same with non-citizens and tourists, they may feel restrictions in the sense that sometimes if you're visiting from one country to another, you may have to contact your bank to say that you're going to another country, or else your bank may stop payments altogether, and that's happened to me before. So again, there has to be better communication between banks, and also the country needs to have a fail-safe in place where if that does happen, so these visitors are not excluded, and it's also helps to bring tourism into the country. And also business that rely on cash, such as I think the big issue equivalent in Sweden, help solve this argument actually with using QR codes. So again, that argument can't really be used to say that we cannot live in a cashless society. And again, I'll go back to this fail-safe point. Like what happens when there's network failures and environmental disasters? Then what is the alternative to using digital money? Because obviously, if you can't connect to the network, then how do you make payments? And this happened in the UK on a minor scale. And in 2018, the Visa card faced a network failure, which caused issues with chip and pin transactions, which meant people were paying using your card, couldn't take money out. Pay, and if there was as it didn't affect ATMs, they were fine. But if there was an ATM in close sight, then there was issues. So again, if you had cash in that scenario, you would be fine. And also this privacy point. If cash is abolished, it means everything can be tracked. And I mean, the main argument for this is that much safer societies you can track dodgy transactions, stop fraudsters in their way. But it could create an uneasiness, such as Big Brother's watching. And how do governments enable that privacy to stay within a cashless society and make individuals still have that priority, which can be considered as a human right? So the central bank's case for abolishment. Obviously, these are very for the abolishment of cash, and it makes monetary policy easier for them, especially when they want to set a negative interest rate, which has been hinted at during the COVID-19 in the UK. Japan have also tried it. As we can see here, they introduced negative interest rates from 2016 onwards. You can see that on the 6 month, 1 year, 4 year yield. However, problem is that if a commercial bank relies heavily on public deposits for investment and maturity transformation, then it can be uneasy, because what depositors can do is take that cash away from banks and store it under a mattress. So, in theory, what a cashless society would be able to bring to the table is that a rational depositor would switch their short-term, long-term savings and invest in higher interest earning assets. This would increase the demand for these assets and thus increasing the price, and therefore the bank's assets would actually increase. However, that's more likely to happen for the more savvy depositors, maybe the businesses as well. There'll be a lot of depositors out there, especially households, who, due to the complexity of the financial market, would be hurt in this scenario, because they wouldn't know where to store their money. They'd just have to take the hit, and again, that would have to come with either government help funding, increasing in education on the financial market, so people understand what to do when negative interest rates are implemented. And again, overall, the cash society would help to reduce the zero lower bound, because at the moment, obviously, my point previously about depositors going to the bank and withdrawing money when there's negative interest rates, that's creating a bank run, which is explained by Dybvig and Diamond, a model of 1983. At the moment, the zero lower bound is obviously quite low to zero for the public, for households. Obviously, for corporate accounts, it's probably a lot easier to implement that negative interest rate, and obviously the EU tried this. And what we could see is that when they actually exposed firms to these negative interest rates, you can see that the high cash holding firms actually withdrew their money from the banks and invested, as we can see that from 2013 to 2017, we can see about a 0.6% increase in investment relative to levels of 2013, which is quite positive in seeing how negative interest rates could help the economy recover, especially in times like COVID, when you want investment and with so much uncertainty, you want this to happen. And then obviously Heidersider and Schleppens argue that banks with a higher proportion of funding from household deposits have a lower propensity to issue safe syndicate loans when rates turn negative. So again, my point, negative interest rates in a cashless society would work, but I think they should stay away from households and focus more on corporate accounts due to the education. And that's where, if you were to do a cashless society and want to implement those policies, then I believe that's the way forward. And again, I believe that it'd be much easier for central banks to reserve the money multiplier, especially with how much cash consumers are wanting to hold, because at the moment that is not fully transparent, because obviously there could be people in the shadow economy, such as builders doing cash for jobs, and thus, if you're able to have full understanding of where the money is and how much people are spending, how much they're wanting to use for consumption, you're able to evaluate the money multiplier better, and therefore not overcook the books, i.e. pump too much money supply into the economy, and we end up in a scenario of overinflation. And I mean, we probably could start to see this with the whole in the UK COVID. I mean, there's a lot of worry about high inflation, as the economy is recovering a lot faster than people expected. A lot of people dipping into their savings now to consume, which is still good for the economy, obviously. But if the Bank of England want to keep those inflation at that 2% rate, then they have to be careful not to do money supply in times when there is down recessions, for example. So the government's case for abolishment of cash, we could see an increase in taxation revenues with a cashless society, as this would help reduce the shadow economy. And Friedman actually has proved this with his simulation that no cash payments at all in an economy would help reduce the shadow economy by about 20%. He also found that cash limits were insignificant, which would go against Modi, the leader of India's policy of reducing the denominations and wiping out 86% of cash in the economy overnight. But you can see why Modi did that, because in India, their shadow economy is reckoned to be as much as 20% of India's entire GDP. Fairly large. So that's a lot of taxation revenue missing. And also in 2013, only 1% of the population paid any income tax at all. So his idea was to reduce the domination size. It means it will cost more for individuals to store that money as they have to store smaller amounts, more cash to store the same amount as previously, and therefore it's harder for them to evade income tax. However, obviously, what Friedman has proved that this has limited effects, and it'd be interesting if Modi's policy has had an impact on that income tax revenue and reduced the size of the shadow economy. And also, we can see here that there is a correlation between the shadow economy and percent of GDP and the share of cash. Obviously, because if there's an increase in cash as a percentage of total payments, it's much easier to have a thriving shadow economy. And we can see here that there is a positive correlation. So again, looking at government case for the development of cash, it's argued that it would have decreased crime, and it's argued that cashes would help reduce terrorism. If we look at the cost of terrorist attacks, the previous 40 in Europe, we could say the majority of them are below that 20,000 mark. And if we look at utility theory and assume that a terrorist is a rational terrorist and achieves happiness from committing these acts, then having a cashless society means that for them to achieve that same level of happiness, it's going to cost them more, because they're going to have to find costly ways, to encrypt, hide their money transfers to make sure that no one catches on of their activities. And that's either a monetary cost or psychological cost. So in theory, and put simply, it should help reduce terrorism in that sense. Also, an argument against this would be that obviously criminals are very smart, and they'll always find ways to go around the cashless society or find new crimes. And we've seen this with cybercrime, and obviously it's been very prosperous in the COVID, in the pandemic, because obviously everything's online, everyone's paying digitally, so it's easy for them to be able to commit fraud and hack individuals' accounts. And if we look at between 2010 and 2012, it's estimated that the percent of total crime proceeds, about 20% of that was done via cybercrime. And Obviously, about 80% of that's done via cash, according to this. So you are going to wipe out a lot of crime, but obviously that will be replaced by cyber. And if you have a cashless society, then they've got a whole new pool to go at. So if you want to go cashless, and the government needs to invest in infrastructure to and education to ensure that these cyber criminals can't break through and commit crimes. And also, the rise of cryptocurrencies is making it easier for these criminals to prosper, as it's helping to fund illegal transactions. For example, the main tender on the dark web, which includes peanut prepared to drugs, hitmen, commit fraud in terms of people's identity, is using Bitcoin. And Bitcoin transactions on dark web grew from approximately 250 million in 2012 to 872 million in 2018. Also, for businesses, it's much safer not having to hold cash in their premises, and this helps to reduce the costs of security, reduction of needs. So again, it's another positive, but criminals are smart and they can get away with it. So I think it is a decent argument, but I don't think you could solely go off this to help try and action a cashless society. So, how can you be in a position to abolish cash? So, the government needs to invest in policies to ensure everyone has access to technology to access digital money, so digital money can still be classed as a public good. There needs to be investment in infrastructure to ensure the country is not vulnerable to cyber attacks. Also, they are fail-safe for when countries face natural disasters and network failures. The country's got to a stage where most transactions are paid digitally, so the population is used to being using cashless. It's perfectly simple. Everyone understands it, so no one is excluded when it does switch to cashless. And as Kenneth Voggers points out, countries need to slowly retract cash denominations. This allows for a smooth transition, and then so try and stay away from Modi's method of wiping out 86% of its cash overnight and only giving 50 days notice to go to the bank to get your 1,500 rupees converted into the smaller denominations. So, what are the arguments for? Well, you have better control of monetary policy, you have a reduction in cash-driven crime, reduction in shadow economy, increased tax revenue, and then you've got arguments against potentially vulnerable to cyber attacks, cash as a public good, and a lack of privacy. So overall, I think the abolishment of cash could happen in the future, but currently I'm unsure because I think there has to be a few key questions that need to be answered. What's the fail-safe when there are network outages? Is there a different way that we can not use cash to overcome network outages? How can you keep the privacy of the users? Is that through encryption or blockchain? How do you ensure that the normal user, that this is not a terrorist or a criminal, is kept private and they feel that they've got their privacy? And also, how do you ensure digital money can still be a public good, so it's not excludable and not rivalrous? Thank you for listening, and I hope you enjoyed. And here are my references.